Hello, traders. It's Wednesday, the 30th of May, 2018. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, coming into the day, what is our market allocation status? And it looks like risk is back on slightly. The market has a bit of a pop in the S&P. The DAX leading along with the euro. Believe it or not, the euro is up 0.78%, 89 pips this morning. Pretty strong. DAX 94.5 points up, 0.75%. The laggard today are the bonds. The bund, the yen, the 10-year, and the US dollar. Gold is teetering around 70 cents up. So you can see clearly the allocation is moving away from safety into risk. A fair amount of news this morning on the feed, the key of which is the Italian lawmakers are agreeing to form another coalition to have another stab at creating a new government. Which has tempered a little bit the panic that was going on in the notes, the Italian notes, the BTP. Last I checked, let's see, the BTP is down. The BTP yield is down 6.64% at 2.95. It was up about 9% this morning. So quite a swing lower. Also, there's a lot of chatter coming out of China regarding the trade issues. So we keep going back and forth on this. And of course, we got ADP, we got GDP. The European markets had German unemployment and a whole bunch of stuff. So there's a lot that is pushing the market around this morning. But overall, allocation is to risk. Let's take a look at yesterday. All right, so yesterday we were opening out of range, and the expectation is for an attempt higher towards I had it at 2707.50 or so at that stock zone. And then an impulse down, and then a push through the overnight low, and a bounce up at the end of the day. That's basically what happened yesterday, except the push lower was much lower. I expected it to get 2690 and push through 2690 by a little bit and push up. It ended up going all the way down to the next stock zone down, which was around 2674. It stopped at 2675. There was a lot of kind of a wall there. I wanted to show you this on the order flow. Let's switch to that screen. There we go. I'm getting to it. There we go. So as we push into that 2675, you can see that as the market comes down, you can see that the bid here solidifies. It goes from about 600-700, and it gets thicker and thicker as price comes down to it. And then there's an attempt at 2675. About 1,000 contracts there. A portion trades, a small, tiny amount trades in all 1,200 trade there. And then we immediately get this buying pop right off of 75. You can see these big green dots. And at this point, the CVD, the cumulative volume delta, is still negative. But on the retest, we get a higher retest, and then all of a sudden, the CVD turns up, the delta turns up, and we see these aggressive prints from buyers. These big green dots, those are buyers all the way through. And it's pretty aggressive buying from that point on until they reach 2690 again from below. And we get it pausing for a little bit. We see offers come in as participants anticipate it stalling. It does stall, and then it gets thick into the close. And that's where we ended up finishing the day. Point of control shifts up, tons of volume going off. Point of control shifts up to where it ended up on the session. But overall, very meaningful buying on the close is the point I'm trying to make. This morning, as we reopen, here's how the map looks from the time we reopen. Here's the reopening back here, and the market takes a dip. We get a strong rally in the Asian session that's taken back, rally again, taken back, and it finally succeeds, pulls back to the rally point, to the collision point, and then we continue higher. And that's what we've done basically today. A fair amount of activity. We got GDP right here. We saw a little pop, but then we also saw a drop on another comment from our friends in the U.S. government. Commerce Secretary Ross saying that the U.S. is in a current situation of asymmetrical tariffs, meaning that it's not an equal or a fair process. Market craters a little bit right about a minute after that's released, and then we've gone sideways. Point being, just watch the news. It's really driving things these days. So overall, we saw the primary scenario play out. It did push higher than the 2707.50 expected. It pushed 2709.50, but it ultimately took its course. We did see an impulse. This is the impulse down right here. And then we saw the continuation into 2675 in the bigger picture. And then now we have our correction. We're opening, looks like around 2700. There was a gap zone here. That's gone. And that's how things are shaping up this morning. Looking at the overnight session, we did review that a little bit on Bookmap, but looking at the overnight session, we have about twice the volume, the common volume, and a pretty good base on the Asian session. Europeans begin, market opens, and it's up and off it goes. We have a 2695. We have a low volume node, the key volume, low volume node for the session. The market is currently above mid, above that key volume node, above VWAP for the session, and above the close. Inventory is currently about 60% short or so. I mean long. I do have a chart for that shows the percent long or short, but I won't pop it in. But the delta is just non-existent. It's completely flat. The current market delta or volume delta is at 181 plus 181. There's really not much going on in terms of volume, so pretty flat there. But we know that we have two distributions, a double distribution, and we are back in the upper range. And we are back where we were at the beginning of the sell-off yesterday on the overnight session. So we sold off overnight on the Italian news. The European session was busy yesterday. And then last night, we've taken that back, and we have basically put our points of control from the prior Globex session to the current Globex session in alignment. So we're seeking balance. The market is doing a good job of re-seeking balance right now, and that's how things are shaping up. As far as where we're likely to go from here, so We have a really decent base below us. We're opening in range. There is no real value from yesterday. We have a key low volume node right in here at 26.92. We have yesterday's mid at 92 and a quarter. We have yesterday's VWAP beneath that at 89. And we are opening way up here. The expectation is an open auction in range that drifts down to correct some of the imbalance overnight. And then I'm looking for a reaction upwards in the 26.97 stock zone, or even earlier, 2700 or so, the century figure. And then I expect us to drift up into this thick area for today. The overall range today is not expected to be all that much. 12 points or so is about the range projected. We do have a gap zone. We left a gap zone behind from yesterday, as I talked about in yesterday's Trader Bite. Let's see. See how I left this. Oops. So see how I left this gap zone open on scenario 1, scenario 2, gap zone open, scenario 3, gap zone open. So we have that area, unauctioned area to deal with. And I anticipate that we are likely to attempt to breach 2709.50. So the first scenario is bullish. Secondary, open, test up, get tangled, test higher, get tangled, rotate down. The key impulse is down, push into through 2700 into 2697, and then drift down towards 2691, 75, 92 for a bounce on the close. Here's the problem. The problem is that this is all news driven. It's just, there's no way to predict what the market's likely to do. So our key job, number one job, is who is participating. If you're not spending, that's not really how my handwriting looks, like a third grader. Who is participating? You know, what time frame is in the market? That's so important for you to discover as early as possible. I use the opening type to help anticipate that. I use the volume, these bars down here, the current volume versus the average 20-day volume for that time period to determine that. I also use context to see what it's accomplishing, how good of a job are they doing in accomplishing that. I'm also using the volume delta to find out which participant is really active. If we see that the delta is going down, okay, let me clear the screen real quick, explain this real quick. If I see that price is doing this, right, it's just kind of going sideways, maybe a small downward skew, and I see that delta is going down, what that's saying to me is somebody's hitting the bid, participants are hitting the bid, but they're not getting anything in return. Does that mean I should get short because delta is going lower and price is going sideways? Maybe, but I don't. What it might mean is that sellers are making a big effort. You know, they're selling the heck out of it, but the market's completely in balance, right? So we have this high kurtosis, actually more like this, a profile that's highly kurtotic, but they're not getting anything in return for all their selling. So this could be a setup to pop once a higher participant comes in and starts to push in the other direction. All this volume now starts to feed the rally. But it also could mean that as the market's sideways, someone is accumulating a short position, and it's a matter of time before buyers stop defending. An iceberg or whatever it is that's buying stops defending that, and then everybody who participated on the buy side to the seller is now forced to push out. So what am I telling you? It could go either way, surprise, surprise. But the key element here is not that, oh great, you're telling me it could go up or it could go down. Thanks, dude. No, the key element is to see that there is no price advance on large volume effort. That's what you want. That's the clue. We're not getting clued in on which direction it's likely to go. We're getting clued in on the fact that the market's getting stacked one way or the other. And we see that price is not making any progress, that whoever's selling is not getting anything in return. Whoever bought from them is not getting anything in return either. So one side or the other is likely to be wrong. And so we are prepared to see to look for clues as to which side is likely to be pushed. Okay. And the key clue is an impulse, is a rotation that expands. If the market's just doing this, right, and then all of a sudden you get a strong move, then I'm looking to buy that impulse and push. Everybody who's wrong is likely to work their scratch trade or whatever, and is likely to push in that direction, especially if the context is overall bullish. So anybody who says, hey, yeah, it's going to open, it's going to consolidate, it's going to go down. Is it gonna? Really? Is it? No, it's not. It's not. It might. It may. It could. It's probable. Or it's probably not. But what we're looking for as investigators, as traders, is what is it accomplishing? And if there's a lot of effort with little accomplishment, get ready. That is balance, that is coiling, that is compression. It is likely to move from there. Anyway, we went over the two key scenarios and my perspective on how to use information to detect early on what is likely to happen. And remember, at the end of the day, every day, we're playing the odds. That's it. It's an odds game. Good luck.